All right, yes, perfect. So in the previous video, again, we went over alerts. Those alerts are very important to understand because the actual alerts, as in the specific place for the alert, is again not super important. It's just understanding we need to minimize our chart time. That is very important. Minimizing that chart time, again, will decrease the risk, will decrease the overall risk of us making an emotional error. And that is exactly what we want. So when we get to a trade ID, of course, we need to follow the foundational levels. So following the foundational levels, they lead us to a trade ID, whether it's a profitable or unprofitable trade ID, they lead us to a trade ID in general. Then we have the analyst phase in those foundational levels, which is mainly the first four. So that is bias, narrative, boundary, and target. Then we also have the execution phase. So that is what we're going to go over in the next video, where we go over the foundation levels, the entry pattern, and the risk management right there. So in the analyst phase, we have certain analyst phase traps, as we call them, and they are in the first foundational levels, where every step we take, there is certain emotions that might start to rise. There's certain thoughts that might also come into your mind that we need to be aware of. That is very important. We need to first off be aware of what we are actually thinking about. So we have 5 emotional errors that we are dealing with throughout our trading. And that is fear, that is discipline, that is anger, greed, and confidence. Now, fear, for example, could be your fear of missing out. Fear of missing out is actually a funny subject, because fear of missing out is, of course, not actually a fear itself. It's more so us being greedy. It's not an actual fear. So fear could be, and the way I will see it here and the way I will also talk about it, is in the execution phase, where mainly if we get to our entry pattern and we now want to actually enter, we can feel some type of fear, some hesitation right there, some anxious feelings. That is what we need to be aware of. Then the second one is discipline. Discipline is also a good one, and discipline is really where we need to pay attention to, not only in trading, but to every area in life. Because I think discipline, if you are not disciplined in the gym, for example, in your personal life, then how are you going to be disciplined in your trading? And discipline and all these things right here also are linked to live trading and demo trading. Now, what do I mean by that? If we are demo trading, then we can first start out with, of course, demo money, not real money, etc. Likely, we are not going to have the same emotions attached to a trade. Maybe some emotions, some ego involved where you just want to be right. You have that need to be right. That's normal. But not the fear state, not the discipline, not the anger. And the discipline is very important if you are looking to demo trade. Why? Because from my experience and how I always demo traded was, I went into a trade, in a demo trade, I was like, let me just execute right here. My entry pattern didn't even form just yet, but I was like, let me just do this. I think it's going higher. Let me just enter right now. Once it actually gets to the challenge, once I'm actually trading live funds, I'll do it differently. That is building bad habits. Those bad habits are extremely important to understand as well, which we're going to go over in a different video. But those bad habits is what we need to control as well. We don't want to build any bad habits right there. So if you want to be disciplined, you should be disciplined in every area of your life. That is very important. So then the third one is, we talked about anger. Anger is, you could get angry for not getting to a certain bias, a narrative, or missing out on a move, getting angry. Or mainly getting angry, and this is, I think, the biggest one, where we get angry if a trade does not play out. And that is where it's dangerous, because that anger can lead us to overtrading, can lead us to revenge trading, etc. That is what we also need to be aware of. Again, that is mainly where entry pattern and risk management also comes in. So for the discipline one, that is one of the ones that is for the analyst phase, what we're going to talk about today. Then we have greed, which is also one of the analyst phase traps, because greed right there, if we see, for example, here in NASDAQ, and we see it already continuing lower right there, and if we just open up the market, then open up our chart, then we might see that and we might get greedy and we want to get involved because we feel like we're missing out on a move. So we get greedy. That also helps. And the way to avoid that is by having a strict routine. So in order to avoid certain greedy characteristics, etc., we need to have a certain routine as well. What do I mean by that? Well, from my experience, if I wake up late and I set out for myself, all right, I want to wake up at 7, so I have an hour to analyze the chart, for example. If I want to see anything, then I don't miss anything. So I'm an hour before I actually want to get involved. Perfect. Do I need that full hour? Probably not, but just a general rule of thumb. Whereas if I now wake up at 8 and I start trading at 8, then all of a sudden I wake up with that urgency. And I'm like, oh, I'm too late. I need to get to the chart. I might miss a move right now. And then with that urgency, also linked to that is already impulsive trading. Because you're now in that urgent state where you're almost telling yourself you're already missing the move. So then that greedy turns into, again, that discipline error where we might already execute on a certain thing, which didn't even show an entry just yet. Here, we might already execute on this right there just because we arrived late at the chart right there. And then we see the move lower and we didn't even get a move or retracement into any PD rate just yet, but we just want to execute. So we execute there, place our stop loss there. And again, from there, we might just lose the trade and it goes against us. And that is because we are making an emotional error right there. So that emotional error of greedy and greediness in general is also linked to our discipline, which our entry pattern, etc., is also where we can be greedy. Our risk management is also where we can be greedy. So this comes back in analyst phase, but also execution phase, where our goal is to make the environment as easy as possible to keep our psychology in check. That is our goal. So confidence is the last one right there. Just overall confidence errors, you could call it. This is always a thin line. And the way I view this is because are you going to have the ultimate confidence right now as me, where I've been trading these concepts for a very long time? Are you going to have the same amount of confidence as me? Probably not, right? And that's probably not even possible. So confidence comes from doing. If you want to take away anxiety, if you want to take away confidence problems, which is linked to, you could call it anxiety, etc., getting anxious, that is where we need to start doing it, where we need to be repetitive with just doing, understanding, making case studies. That builds up confidence. Kobe Bryant, LeBron James, Lionel Messi, Cristiano Ronaldo, all people that build their confidence through practice. Practice builds confidence in the games. It allows you to have that confidence in the game because you know you've done it over and over and over and over in maybe previous games, but also in practice. So first we need to practice, but a great football player doesn't become a great football player if he just practices. I think we all know, and if you've been involved in team sports, there's people that are great in practice, but they are just not that great in the game overall. There's also people that are not great in practice, but they're amazing in the game. So we want to focus on being amazing in the game. Whether the practice is great or not doesn't really matter, as long as we make certain case studies. And what I'm referring to here is backtesting, where you would use the replay tool right there to actually get to a trade ID and to backtest. I do not think this is beneficial. And that's the same with demo trading. I do not think demo trading is beneficial. The person that actually dives into the game first, the person that risks a little bit of money, doesn't have to be a crazy amount. Can be as little as, I don't know for what amount you can buy a challenge. Maybe 20 euros somewhere, 20 US dollars, something along those lines. 50, something like that. Then right there, that is what you would want to risk to buy a certain challenge or something, to have some emotions involved. That is when you can get good at the game. We want to get good at that game. Just practicing with, for example, having those backtesting tools, those backtesting websites, I do not think that's very beneficial. Maybe to get to know the strategy overall. I would argue, yes, to get to know the strategy overall, seeing where your errors might be, yes, it could help you. But I want you to be aware of when you are backtesting, when you are demo trading. it's very easy to get comfortable in that. So when people then move on to the live trading environment and take a singular loss, one single loss, then it's very easy to now go back into your comfort zone and think, all right, that demo trading, I'm not good enough. Maybe let me go do some more demo trading. Let me go do some more back testing to fully understand everything. No, yes, that might be the explanation first, because there's also emotions involved on your side. That live trading is just uncomfortable to you. It's just uncomfortable. And we need to be uncomfortable in order to grow right there. Just as I can remember very vividly, actually, when I first started playing basketball, I was scared, very scared to go into the game, extremely scared. Then over time, once I did it more and more and more, and I failed a couple of times, and I noticed, all right, when I'm failing, I just improve my game overall. So there's nothing scary about failing anymore. I like failing because it allows me to improve. Perfect. Once we know that, and then we can build onto that. And my first basketball game, let me tell you, once you're in the game, you do great. You probably do great. It's just that moment that you need to get in. It's so scary. I was very young, and I can remember it very well, actually, where I was super scared. I was super scared to get into the game. All emotions start to rise up, and over time, you get more comfortable. You don't get more comfortable by just practicing. That's what I'm trying to tell you here, where if I got into that game and I did one mistake, the solution is not going back to practice and practice. No, it's going into the game again. It's going into the game again and then potentially failing again. And once you fail, you get better and better and better. So that's also the attitude that we need to have towards the market here, where backtesting and demo trading is sort of like a coping mechanism, where people like to share their data that they achieved in backtesting, but in live trading, they're just simply not too scared. They might not be super aware of it, but they do know that they might not know, but in order for us to actually be live traders, what do we need to do? We need to live trade. We can learn as much as we want about swimming and water and how we may maneuver ourselves into the water, etc. But the person that actually just dives into the water will learn it the fastest way. So don't be scared to fail in the beginning. You will fail. You will have emotions starting to rise up. It happens. It's normal. You need to go through that stage in order to get to the next stage. It's part of the process. You need to understand that. So that is very important as well. Which we talked about confidence right there, because that leads to confidence. We build confidence through repetitions. So seeing an entry play out over and over in live, in real time, not in your backtesting, not in your demo, that doesn't really build that confidence. Confidence comes from doing the thing. And doing the thing is where we want to be live trading, because we want to make profits. We want to be live traders. So we need to do that. That is very important. So you also have, of course, because I was talking about lack of confidence, you also have overconfidence, which also is what we're going to talk about, the execution phase traps. Now, overconfidence can also be in the analyst phase, where we have lack of confidence and overconfidence. Overconfidence is usually the other side of the pendulum. And what I mean by that is we have balance. Overall, we are just in balance, right? Let me draw a little bit of a straighter line. We have balance in the form of this, where there's something hanging right there. A ball, and that can swing one way to the other way. Where we have first a lack of confidence, and the ball is right there. That lack of confidence sort of grows into overall a stable confidence, better confidence, more confidence. But we need to be aware that lack of confidence doesn't turn into overconfidence right there and swings the other way, where we are now too overconfident. Where the pendulum, we want to have it in balance right there. Balance is key, because if we have a lack of confidence, that's not beneficial at all. That's more so detrimental, of course. Do we have overconfidence? Then we will see every move that we have in the market as high probability potentially, where we think we can get involved in any move without having any attention to different details, etc., because we are overconfident. we think everything we do should be great and everything we do should play out this way, which that is overconfidence. That is not something we want to have, of course. So we want to be in balance, to be objective as possible. As objective as possible is where we want to be. And that can only be achieved once we are in balance. Again, these things that I'm talking about here, it's making you aware of it. And what I'm trying to tell you right there is that when I learned these things, I learned them through doing, as in I learned them from messing up, from failing. So these things are here to help you eventually realize in what stage you might be, and then learning from that. This is not this knowledge here, and this is the thing I want to ingrain into your mind, is that we need to be acceptance to fail. We need to accept that we are going to fail at first. We are going to have a tough time at first to then have the better times. There's no light without the dark first, right? So that is very important, that I want to instill into your mind that we are going to fail first. And the reason why I say that is because these ideas that I'm telling you here, they are going to make the environment as easy as possible for you to keep your psychology in check. But at first, you are likely not going to keep your psychology in check. You are likely also going to mess up first. And that is important, because that messing up, if we learn from that, then we can improve. Nobody got into trading and they learned about this. And that's also not how I learned to keep my psychology in check. It's not that I learned this sort of secret and all of a sudden I keep my psychology in check. No, it's doing it over and over and over, messing up, failing, overtrading, blowing accounts. And then we get to the stage, hey, okay, I'm getting better. Last week, I blew 3 accounts. This week, only 1. I'm doing amazing. That is the mindset we need to have, where we are getting better every single day, 1% better every single day. It's not all of a sudden all your problems are fixed. No, over time, we are fixing the problems through realizing which problems we actually have by knowing the emotional errors. That is what we need to understand. So again, the reason I say that, it's very important to have that right mindset, because it's not the mindset to have, and that's the same with concepts, that the concepts work. Yes, they work if you also put in the work. And it's not a concept out there that all of a sudden, hey, I don't lose anymore. No, it's a gradual process where if you stick to the same thing, then we are going to get better, better, better. The win rate is going to increase. The RR is going to increase. Overall, our profits are going to increase. The capital we are trading with is going to increase as well. That is why it's called a process. It's not a binary thing. It's not we turn it on, boom, it happens. No, that's not true. So you turn into a trader slowly, where you slowly become better. And this is always a funny question. And I'm going to finish this story as well to get your mindset prepared for everything. Because turning into, and I've got this question quite often, mainly during live streams, where people ask me, when did you realize you were a profitable trader? Or what was the moment? What did it feel like when you got profitable? And the thing here is that it's not all of a sudden that you reach a border and you're just in front of that border and you cross the border and all of a sudden you're profitable. No. It's first you start off as the most unprofitable trader there is on the planet of the earth. Perfect. Then we fail one time. From that failure, we learn something. So we take that into the next trade ID. All right, then I fail again because now I don't have my risk management on point. Perfect. So I fix my risk management. All right, nice. Next thing is I now start overtrading. All right, now I need to stop overtrading. You turn into a profitable trader slowly. The same way you turn into an athlete slowly. Some people are natural athletes. But when you want to learn a sport, you're going to need to learn it regardless whether you're a natural athlete or not. You're going to need to learn that sport. So you first fail and you don't really seem to get it at first. And then slowly over time, you become better. So the border for you to become profitable, there is no border. And the funny way the market works is you first need to get rid of all the errors. You almost need to be perfect in order for you actually to be profitable. It's like every time there's a single error, the way I view it is before when I blew a lot of accounts, every time I got into the new account, it's like I have this new obstacle that I need to go over first before the market can reward me to be profitable. Because the market exposes all your weaknesses. Where if you're defending someone in a sport and you have an attacker in front of you, the attacker is looking to expose all your weaknesses first, so he can beat you very easily. That's the same way the market is doing right there. It's going to expose all your weaknesses. And those weaknesses is what we need to improve on, get better on over time. It's not a one-time thing. It's over time. And then from that, we'll turn into a profitable trader slowly, slowly, slowly. And it's not that you realize it. And the way I like to compare that always is that you're going from America to Europe with a boat. You're leaving America right there, and you're in the water, you're in the ocean, and you don't see anything. You don't see any progress at all. But slowly, just know that you are getting there, and that eventually that Europe might be a payout, where all of a sudden you get a payout, and then you're realizing, hey, let me look back how far I actually came. Wow, I came a far way. So if you're in that ocean, you don't see any land. But me being above you right there, not saying that I'm superior, that's not what I'm saying, but I can see your progress more clearly. Where you came into this mentorship and I could see through an onboarding thing, I could see, hey, you are here. And right now you are here. Yes, you are making progress. You are moving. You just don't sometimes realize it. So again, this is an extremely important mindset thing that we need to understand as well. And right now, let's dive into the actual analyst phase and let's go into the technical part of it. So the technical part of it right here is understanding the 5 stages of probability. So we have 5 stages of probability in every single trade ID that we take. So let me go over NASDAQ. Let me use the same example right here. We're also going to use different examples, but the 4 hour right there, we were continuing higher, most likely. Now, first, let's actually zoom out. So on the monthly right there, what do we do? Well, on the monthly right here, how do we first want to understand that we should not mess up in that analyst phase? So these are the analyst phase traps. The first trap is that it takes too much time. Analyzing takes too much time. If it takes too much time to even get to a bias, then you should already quit. The bias narrative, the boundary, and the target should be very easy, very smooth, very easy going. So here, for example, the bias overall is we've just been going higher. Perfect. With this high as a first target, after that, it's that. So the bias was quite easy, right? It's just seeing we've been going higher overall. If you have a consolidating bias, it might not be that easy. So right there, you might want to skip that pair, or you might want to wait a little bit. But it's understanding that you are not over analyzing something. You should not overthink things. It should be very clear. And if it's not clear, then likely you are right. It is indeed not clear right now, meaning you just want to stay out. Where, from my experience, it's the beginning. When you start to actually trade, you start to analyze, etc. It's like it's that need that we always need to know what is going to happen. We need to have some kind of idea if it's going higher or lower. Let that go. It's okay to not know if it's going higher or lower because we can trade something else. We don't have to settle for less. We can trade there's a better fish in the ocean, so we can trade something else instead. That is very important to understand as well, that we don't need to force an ID. An ID should come to us right there. We don't need to force anything. So that's very important. That's the first step in our bias. Then the next thing to understand is that the bias is the highest probability to be there. So the bias is actually the first step and it's the highest probability to always be there. Here, there's a bias. But the narrative, the boundary, the target, there's a lot of things that need to agree first before we can actually get to that trade ID. So here, that next step, that narrative is already lower probability because we need now the narrative also to agree. We first need to have a clean bias, then we need to have a clean narrative. So right there, that is also already lower probability. So if we then find a narrative right here and we go into the weekly, then here we see a narrative. because that weekly value gap is where we can push higher from. Perfect. It should just be that clear. Where, for example, at this moment in time, right there on the weekly, do we have a clear narrative? I would argue no. So setting that boundary for yourself, as in the boundary, setting that limit for yourself as well, where if you just don't have that clear narrative, don't have that clear boundary, then don't overthink it. And what I mean by that is that if you don't have a clear boundary, narrative, bias, whatever it is, then likely it is just low probability. So if you can't get to a clear bias, narrative, boundary, then it's likely just low probability. And that is as easy as it is, because here, if you now go into the daily, you go into the 4 hour to force IDs right there, then you are definitely trading low probability conditions. So overall, it should come very easy to you. The bias, the narrative, the boundary, it should come very natural, very natural. And if it isn't doing that, then perfectly fine. You know that you should not trade that situation right there currently. So here on NASDAQ, at this moment in time, it was pretty clear. All right, we want to trade into the weekly value gap. And from that, we can continue higher. So right there, we know it came very natural to us. There was not a lot of discussion to be made. We are continuing higher off of that. Perfect. Very, very nice. And again, it's a very easy bias narrative boundary, as in it comes very natural. You should not have to force it. That is very important. So the next thing is that right there, we have the 4 hour, which continued higher. And I want to go into that PD array as well. So once we have this move right there, again, overall, it comes very natural. Now, right now, we need to understand as well the 5 stages of probability, which is the next thing. That if we have a narrative and we have a bias, then once we know where it's likely going to continue higher from, so we have the PD array here on the weekly right there, that is going to continue higher from. In the meantime, you will have 5 stages of probability. So the reason why we also don't want to go into the daily right there, into the 4 hour to force an ID, is because we already have that weekly value gap. That weekly value gap is enough because that is the highest one. It's in context. So we don't want to force anything below that. The highest probability is always going to be to wait for that weekly fair value gap to then continue higher off of that. Because overall, we are bullish. So trading towards that usual context with unusual context is lower probability overall. We need to understand that. It's also what we talked about in the high probability versus low probability. Now, right here, the first stage that we actually have, the first stage of that probability is seek and destroy conditions. So what does that mean, seek and destroy conditions? Seek and destroy conditions simply is that we are not respecting fair value gaps on both sides of the market. So right here, we can also see it as just a simple consolidation right there. That is exactly what we would like to see as well. So the first stage, before we get to any trade ID, is likely going to be seek and destroy. That is the lowest probability. So here, you don't get involved at all. So this also helps with understanding on when you should be waiting. Then the next one, the second one, is we have our PD array. So our PD array is getting touched, and we might actually be in to look at an entry pattern. This is also low probability still, because you still have nothing to do. You are still just simply waiting right there. So this is, again, low probability as well. Then the third one is we have an ST. So this is taking into account that we go for an ST plus a re. If you're just looking at ST entry, of course, it would be a little bit different. But the ST right there is mid probability, which means what? It's not low, it's not high. We need more confirmation overall. Then the fourth one is we have the re, which is high probability right there. The re is always high probability. So then the fifth one and the last one is the no re right there, which is highest probability. The no re stands for no resistance. That is the highest probability right there. So if we go over this, and why do we use these steps? Well, these steps is something it might be very nice to first stick to understand hey, I need to be a little bit more patient here. Hey, let me wait. This is not the highest probability. So it helps for you to stick to something, if that makes sense. And that is, of course, what we want to use in the beginning. Could be very nice for you to help as well with your psychology, to make the environment easy to understand as well, in which stage we actually are, so we don't have to force anything. Where, for example, right here, if we just have a bias, then we don't have anything to do. So that might be step one, where we just have seek and destroy conditions, lowest probability. Then if we have that narrative, nice, all right, but we have that PD array, the second step right there. We could continue higher off that, but it's still lower probability because we don't have anything to do. So this helps you recognize the stages we are actually in, which also makes the environment easy to understand on which stage we are in. So the environment becomes a little bit easier to keep our psychology in check as well. So right here, we have our bias, because our bias was just continuing higher. All right, we also had the weekly Verweil gap. Then before we come into that weekly Verweil gap, what do we actually see? We see seek and destroy conditions. All right, that's the lowest probability to do anything. It's the lowest probability price action to actually get involved right there. Perfect. So if we do not have clear, unusual context, we just simply want to wait right there. Then we have PD array. So the PD array is right there. We come into it. We don't have anything just yet. It's still low probability because we don't have anything just yet. We don't have an entry pattern, so we just simply wait. Then the next step is the ST. The ST is sitting right there. This is a 4-hour ST. The 4-hour ST, if we paid attention, the 4-hour ST is again already a re. Why is that? Because that is the way we combine the time frames, right? Where if you wait for an ST plus a re, you would go into the 1 hour right there. Where the 4-hour is equivalent to your 1 hour ST plus re, meaning that the 4-hour ST is already higher probability. But overall, if we just have an ST right there, then of course, this ST is lower probability than waiting for another re right there, which is higher probability. So then once we have this move higher, then what is the no re? What is the highest probability? Well, the highest probability is when we have no resistance anymore, meaning that we don't have any fair value gaps to the left side of the chart right there that we can come into and expect a rejection from. Because the PD arrays here, these are not PD arrays, premium arrays that we want to trade off of, but as we can see, they are giving us some kind of rejection, right? So they are some kind of resistance before we can continue higher overall. So if we understand that, then after this move right here, this last move is the most explosive one. Why is that? Because in this area and above this, right there, there is no resistance anymore. That is the highest probability. If you have that on the 4-hour, then right there, going into the lower time frame, that's extremely high probability as well. If you have that PD array to trade off of course. So these are the 5 stages of probability, which we'll also touch on more, but this also helps to keep your psychology in check, understanding where are the actual traps, where do I definitely not want to get involved. And if you understand that, then you don't need to seek and force an ID in that seek and destroy, because it's simply not there, because it's the lowest probability right there. So if we look at this same exact thing on different examples, or for example, on the 4-hour right there, we have the same exact thing. If we go into the 5-minute, then on the 5-minute, what do we see? Ahead of coming into that 4-hour PD array, we have just seek and destroy. It's the lowest probability. We do not want to get involved there. Why is that as well? Because we had NFP on 8:30 right there. So we wait for that. So we wait for the PD array to get a sting into. Did we know exactly it was going to be that PD array? No, because time was helping us in that sense right there. After that, we have the PD array, still low probability because we don't do anything right there. Still low probability. You still just wait. You're just waiting for something, for an entry pattern right there. Then we have an ST. And the ST here is mid probability. We are a little bit 50-50. Why is that mid probability as well? Because the mid probability right there is understanding overall that we had bearish order flow, and now we are potentially looking to create bullish order flow. So from an order flow perspective, that right there is 50-50. Until we create what? Until we create a new rehire, which confirms bullish order flow, which is now high probability right there. So that is high probability. And then once we have that no resistance anymore, which I would argue it's the same entry as the right there, that is even higher probability. No resistance in between that context right there. Because the context, again, that no resistance is referring to the context. When we are high in the context leg, before we take out the high right there, we usually don't have any resistance anymore because we already got the rejection here. We got the rejection already after that, and then we don't have resistance anymore, and then we explode higher right there. So these are the stages of that probability again. This is what we're constantly working with. Understanding again that these help us and they benefit us in the overall psychology of trading as well. The analyst phase right here and the traps that we have for bias, narrative, boundary, and target. Let me go over a few examples. I'm just going to do my analysis that I would just simply do in a forecast, for example. Just going over my analysis, how I would go about it. So, and if I go about it, I'm going to go about it with deeds as well, but I'll tell you exactly how fast I also go over it and what I do not want to see, etc. All those things. Let's start off with Australian dollar, Canadian dollar right there. And let's start on the monthly. Then on the monthly, we need to first get to that bias. All right, what is the bias doing here? Well, we can potentially still look to be bullish right there. So if we want to still be bullish, then let's find some narrative to overall continue higher right there. Bias, bullish, monthly value gap potentially being created. All right, we could even head towards the swing high right there. Not too crazy. I kind of like it. Weekly right here. All right, nice. We have weekly narrative boundary that we can continue higher off of. Perfect. Would like to continue higher off of that. The only thing is of course, you can also see we reached that target already right there on that swing high. So depending on what we do right there, we would have to see if we still want to continue higher. So do you notice something? Because that is where the first doubt came in. The first doubt came into my mind right there, where we still had the narrative right there, as in we are continuing higher off of that, but we also already reached those targets. We reached the context high, we reached that first drawn liquidity, meaning that we reached certain targets. Then we want to take a step back to be careful again. So understanding here that basically everything that happened and we talked about in the 5 stages of probability, the cycle is now starting over again, where we need to find that new context. So here is not necessarily where we want to get involved. So that is also where the first doubt came in right there. Where here, well, if we want to continue higher, we can continue higher off of this daily value gap sitting right there. But again, we had a huge sweep right there, which I do not really like. So in this moment in time, there's doubts. So what do we do here? Well, the trap overall here is, again, if you then go into analyzing it even further, here you should just basically say, all right, pretty 50-50 in my eyes, could go either way, don't want to get involved. Perfect. Let me go to the next pair, where the trap is, again, if I were to now go into the 4 hour right there, if I were to now go into the 1 hour to get an ID, because I feel the need to get an ID. That is the trap, where you are now over analyzing it, you are now overthinking it. That is not what we want to do right there. We want to be very strict, very easygoing. And again, in the beginning, like I mentioned as well, my experience allows this as well to be a little bit more easygoing, where in the beginning you might need a little bit more time. But still, in the beginning, if you feel like you're over analyzing it, then stop right there and move on. It's very important. So if we go over the next one, Australian dollar CHF right here. And let's go over the monthly. Is there a clear bias on the monthly? No, stop, boom, next one, next pair. That's it. That is very important, where here I can already see on the monthly, there's just not a clear bias. There's just simply not a clear bias. We were finishing that context right there to continue lower overall, which we did not do. So we failed to take out that low right there. And now we have this candle and that candle, which took out the previous month's high, previous month's low. It's just simply consolidating here. So what do you do right here? Stop everything you're doing and just move on. Delete it from your whole trading view list. ignore it at all costs. And the reason why that is so important, because right now, understand that if I analyze this pair long enough, we can get to a trade ID. So for example, I'm going to do right now, and pay attention, I'm going to do what you should not do. So right now, if I saw the monthly, and I would have seen the previous month high, previous month's low right there, and then went into the weekly. All right, we're sweeping that previous or that swing high right there. We could continue lower from there overall. So let's see if we actually want to continue lower on the daily time frame. We have this daily fair value gap sitting right there, which we can continue higher from as well. Then on the 4 hour, we have this 4 hour fair value gap sitting right there, which we can also continue lower from. Then on the 1 hour right there, we also have this 1 hour fair value gaps right there. So here I think we can definitely continue lower overall right there. To then continue lower right there. Now, is this a bad trade ID? This might still play out. But the thing I did right there is I'm over analyzing, where I already didn't like the monthly, already didn't like the weekly, didn't like the daily, and then I'm going down in time frames to justify a trade ID, to force a trade ID. This is exactly what I mean and why we need to minimize our chart time. Because if we minimize our chart time, we avoid scenarios like this, where yes, we can always get to a trade ID. Believe me, I believe everyone here can get to a trade ID. No worries at all. 100%. Is it a good trade ID though? Probably not. That is what we need to understand, where a trade ID comes very natural. It screams at us. Just like we saw on NASDAQ, it screams at us. It's very easy to get to, where here we needed to almost convince ourselves that it's going to do this, might do this, might do that. That is not what we want to have, right? It should be very easy going again, very easy. So let us find another example right there. And this is again what you should then not do if you're over analyzing. You're over analyzing to force an ID. Trading is not about can you get to an ID. We can all get to an ID. Everyone can get to a trade ID. Even people that haven't traded in their life before. When they're trying to buy stocks, this is always the funny thing. And I've been there as well, where I just look at the past. So it's been going higher, so it should be going higher, right? Everyone can get to a trade ID. Is it a good trading ID? Well, the person that thinks, well, this stock has been going higher, so I think it's going to go higher again. Is that a great trade ID? Well, probably not, right? Because they have no idea what's actually going on. Where we as well, we can get to a trade ID, but our trap right there might be sometimes that we are over analyzing it. We're doing a little bit too much. We need to find that balance right there. It's very important. So Australian dollar JPY, let's take a look. Australian dollar JPY, we had the monthly currently, I would say, all right, it's looking quite bearish. So we might head towards that swing low right there. Weekly, we have a weekly value potentially in the making. Okay. Daily fair value gap right there, which we're already continuing lower off of. So on the 4 hour, what are we having? 4 hour, we have this 4 hour fair value gap, which we came into, continue lower off of that. Now, currently, this is also a trap, because on the 4 hour, we can see we just simply don't have a clear fair value gap going lower. So what do you do in this moment? Well, I would say I'm just waiting for a new 4 hour fair value gap lower. That's it. And that's also where I cut the line. I stop it. Because I saw we had a 4 hour value gap right there, which if order flow wanted to continue lower, it should create a new 4 hour value gap lower off of that as well, which it just simply did not do. So right there, what do? I quit. I stop. I do not go into the 1 hour right now to say, if we have that 1 hour value gap right there, I might want to trade off that. No, I stop because I saw on the 4 hour, we are not following through on order flow. So I first need the 4 hour to agree again. So I'm not over analyzing again. It's very important. So if we go to New Zealand dollar JPY, for example, then here we look at the same thing. Monthly is not following through. All right, could continue lower. Bias overall, I would say on the monthly, not the best. Why not? We don't really have a clear discount rate overall to target. First one is the previous month's low, which is currently the only real one. Then on the weekly, what are we seeing? Weekly, we reached this target in the form of that fair value gap right there. All right, but if we want to disrespect that, we can potentially look to continue lower as well. On the daily time frame, we have the daily fair value gap sitting right there. Perfect, nice, okay. We can continue lower off that. Then on the 4 hour, we just have 4 hour fair value gaps lower off of that again. And that is, all right, quite nice. But currently, at this moment in time, would you have a trade ID right here where we're currently hovering? No, not really. Why not? Because there's just not that clear narrative again, where the narrative there was quite clear, narrative there was quite clear as well, narrative there was quite clear. But after that, we don't have the clear narrative again. So that is what we need to pay attention to. So this is about not overanalyzing. Now, I can also, of course, understand that if you are to trade one single pair and one single instrument, then you do not have that luxury to go into a different instrument, a different pair, to then say, oh, but I'm just going to trade something different. No, because you are going to trade one instrument, one pair, and that will be your skill in that sense. Perfect. That is when you can allow yourself to use more time frames to get to a trade ID. Still understanding that the ID overall should be very clear. So what does that look like? Well, here on NASDAQ, currently, we came into, don't need to use the replay tool actually, we came into that weekly value gap. We can continue higher off of that. First is this target, that drawn liquidity right there. So on the 1 hour right there, in this moment in time, let me actually see, on that Tuesday right there, we don't have a 4 hour value gap to work with, or not yet, before we came into the 1 hour right there. All right, so we can go into the 1 hour to look for a certain trade ID, where we do have this 1 hour value gap right there, which we can continue higher off of right there. But still, at that moment in time, we are using more time frames, but the trade ID is still very clear. We're still in weekly context. We're still knowing what drawn liquidity is. We know that that 1 hour value gap will likely push price higher right there. Same for that 1 hour value gap right there. Once we reach that high, we know what to do again because we zoom out, and the trade ID is still clear because once we reach a high, we can find that new context, weekly context, 4 hour context, highs overlapping with the fair value gap to continue higher off of that. Perfect. Now we can look into, again, what is the daily doing? Where do we have those fair value gaps that we need to take into account overall? Do we want to come back again to those highs, to then the overlapping fair value gap, to then continue higher off of that? All things we need to take into account right there, where, for example, currently, I would argue at this moment in time, well, the trade ID here is not that clear because we don't have that clear weekly context anymore. We don't have that clear drawn liquidity anymore. So here we would want to wait a little bit until we see something very clear. Either very clear bearish price action where we can target a daily fair value gap, or very clear coming into daily fair value gap to continue higher off of that again. So it's that not over analyzing part that is extremely important in your analyst phase. That is the biggest trap in the analyst phase. Over analyzing, overthinking certain scenarios. And even when you think you are not doing it right, when you think you can't get to a clear drawn liquidity, when you think you can't find that clear narrative, that is likely because the market, that instrument is just not clear overall. So that's an indication that it is low probability. So don't overthink that you should always find a trade ID. Every person in the world can get to a trade ID. We just want to find the best trade IDs. That is very important. And we can only do that by not overanalyzing. So the importance right there is, again, that it's not that important if you can get to a trade ID. It's not that important. If you can get to a good trade ID, that is important though. So that is also letting go, as in you don't need to get to a great trade ID on every single pair. It's letting go. You can find another great trade ID. Don't worry. This is the analyst phase traps, and understanding those 5 stages of probability as well, they help with that. Again, might be a little bit overwhelming. Don't worry, because we are going to touch on it more and more and more. All right, perfect. Thank you.